Welcome back. Saudi Aramco is expected to file its IPO prospectus by the end of the month. The Aramco IPO was delayed in 2018, reportedly over Saudi officials' concerns about public scrutiny of the company's finances. According to a timeline seen by the journal, the prospectus will first be published in Arabic on October the 25th and then in English 2 days later. The state-owned oil enterprise will list its shares on Saudi Arabia's Tadawul exchange as part of Crown Prince Mohammed bin Salman's economic reform plan. The Crown Prince anticipates listing 5% of the company in total domestically and internationally by 2020 or 2021. South Africa's business confidence improved from a 34-year low in September to 92.4 from 89.1 in August. A survey by South African Chamber of Commerce and Industry shows that 7 sub-indices of the index improved and 3 remained unchanged between September and August. Positive annual contributions in September came from the higher US dollar price. Welcome back. Saudi Aramco is expected to file its IPO prospectus by the end of the month. The Aramco IPO was delayed in 2018, reportedly over Saudi officials' concerns about public scrutiny of the company's finances. According to a timeline seen by the journal, the prospectus will first be published in Arabic on October the 25th and then in English 2 days later. The state-owned oil enterprise will list its shares on Saudi Arabia's Tadawul exchange as part of Crown Prince Mohammed bin Salman's economic reform plan. The Crown Prince anticipates listing 5% of the company in total domestically and internationally by 2020 or 2021. South Africa's business confidence improved from a 34-year low in September to 92.4 from 89.1 in August. A survey by South African Chamber of Commerce and Industry shows that 7 sub-indices of the index improved and 3 remained unchanged between September and August. Positive annual contributions in September came from the higher US dollar price of precious metals and energy supply, mainly owing to a decline in the crude oil price. And in Zimbabwe, for the second time in 3 months, there has been an increase in the average electricity tariff, and this time it's by a whopping 320%. The National Energy Regulator says this is in order to let the state power utility ramp up production and improve supplies at a time of daily rolling power cuts. Power cuts lasting up to 18 hours have hit mines, industry and homes, and tougher with a devastating drought, or together with a devastating drought, have been cited by the Treasury as among the main reasons why the economy is set to contract by up to 6% this year. The jump in power costs will further anger Zimbabwean citizens who over the last week seen sharp rises in fuel and basic goods prices. And back home, the International Monetary Fund expects Nigeria's economy to pick up to 2.3% in 2019 on the back of continuing recovery in the oil sector and a boom in agriculture following a good harvest. The forecast forms part of a report of the just concluded IMF team visit to Nigeria to discuss recent economic and financial developments. The IMF says Nigeria's pace of economic recovery remains slow as suppressed private consumption and investors' wait-and-see attitude kept growth 2.0% at half-year, a rate significantly below population growth. Meantime, the IMF commended the improvement in the banking sector prudential ratios, but cautions on unintended consequences arising from new regulations for banks to increase lending. Away now to Uganda, where the fishing industry is recovering from years of setback caused mainly by overfishing. Leading this recovery are small-scale fishermen who breed stocks of tilapia and catfish in farms away from the country's depleted lakes. Let's take a look at this report.
After years of decline due to overfishing, Uganda's stock of fish is now getting a much-needed boost from the country's small-scale fishermen. Justice Lutaisire operates a small fish farm in the country's Wakiso district, not too far from the capital, Kampala. With the help of a few workers, Lutaisire maintains a 14-acre farm where they produce up to 3 million fish per year, mainly catfish and tilapia. Many are fingerlings sold to other fish farmers, and the adult ones sold to the market.
The fish stocks have been going down. And as the human population increases. So the gap between supply and demand increases. And when it increases, the price of fish has been going high. So it becomes very clear that it would be unwise to depend on fishing alone. We need to relieve some pressure from the wild stocks by growing the fish ourselves.
Last year, figures from the Bank of Uganda showed that the country exported fish worth $171 million, making it the fourth top export after coffee, gold and dried legumes. According to the United Nations Food and Agriculture Organization, Uganda produces up to 15,000 tons of fish from aquaculture, including those from fish farms like Lutaisire's emerging commercial fish farmers and stocked community water reservoirs and minor lakes. An estimated 20,000 ponds are spread throughout this landlocked country.
There's too much rain, and there's flooding. There's washing of all these farm effluents, industrial effluents into the water bodies. So you get a lot of algal blooms, and these have an effect on oxygen and the balance of fish. Some of them can cause fish kills.
Despite the challenges, Lutaisire has its sights on expansion as demand grows and market prices keep improving.
We have about 3.6 million fingerlings for tilapia and about 200,000 per month for catfish, with about 2.4 million fingerlings for catfish per annum. But we are still expanding. We intend to produce 1 million fingerlings for each of the species. So we'll be having 24 million per annum for the two species.
The growing number of fish farming in Uganda can only bring good news for now. Authorities are hoping that this will ease the pressure on the country's lakes, including the world-famous Lake Victoria.
Oil prices slipped for a third consecutive session today as tensions escalated between the United States and China prior to this week's trade talks, raising uncertainties for global economic growth and oil demand. Brent crude futures fell 0.4% to $58 a barrel, while U.S. crude futures were at $52.39, and that's down 0.5%. Negotiators from the world's top two economies will meet in Washington on Thursday and Friday in the latest effort to hammer out a deal aimed at ending a long-running trade dispute that has slowed global economic growth. Meanwhile, gold prices held firm earlier today as sagging hopes for progress in U.S.-China trade negotiations sapped risk appetite, with markets watching closely for clues on monetary easing by the U.S. Federal Reserve. Spot gold was a little changed at $1,505.46 an ounce, and U.S. gold futures gained 0.5% to $1,511 an ounce. Meanwhile, silver inched 0.2% higher to $17.75 an ounce, and platinum rose 0.3%, and palladium declined 0.3% to $1,670.82 an ounce. And that's our show today. Thank you for watching. I am BC Adebayo.